Hey folks, Alex here, 9 to 5 to Freedom. In today's video, we're going to talk about how I live on margin, how I live out of my brokerage account, which is Robinhood, and how I'm able to make over $150,000 on dividends, and I'm able to pay my bills, pay down my loans, and build this machine that will one day replace my 9 to 5 job. So let's hop into it. Let's get started. Lots to cover here. Okay, folks. So first things first, if you haven't seen my previous video, and I'll just reference it here. This is the video that really made my channel take off. It goes back about 2 months ago. The title was How to Live Out of a Brokerage Account. Now, I'm going to utilize the diagram in this video and really talk about it and explain to you the process. Now, when I made this video, I was with Fidelity. I started out with Fidelity many years ago with my 401k, my IRA, and I had no issues with it. Fidelity was a great platform. I also utilized their credit card, which gave 2% cash back. So I paid a lot of my bills and stuff with that. Now, with some of the events that transpired in the past month, one of them, which after I had a wash sale, they put me in this 30-day waiting period for me to utilize margin, which I did not appreciate. And also Robinhood was offering a nice incentive to transfer all your money, and also they're offering a much lower margin rate. So for those reasons, I decided to leave Fidelity and I went over to the dark side, to Robinhood. Now I'm going to show you in Robinhood my portfolio. I'm going to show you my holdings, and I'm going to explain to you the system that I'm using in order to live on margin. So what does that mean? Well, let's get into my portfolio first. So this is Robinhood. This is my account. And as you can see right here, this is the amount of money that I've invested into this account. It's showing that right now I have roughly $252,791 of my own money. Now this number fluctuates with the market. So sometimes it can go down to 250. Sometimes it can go up to 255. It all depends what the market is doing. Now, my positions are very, very diversified, and I've messed around with my positions for the past really 9 months at this point, testing out different types of risk versus reward. So I'm going to show you some of the positions, some of the largest positions that I hold, and none of this is financial advice. Everybody do your own research. I'm just showing you what I'm doing and how it's working for me. So my top positions, and I'm just going to organize them by market value. My top positions are XDTE. Now this is from Roundhill. This pays roughly around 24 to 25 cents a share every single week. And it is diversified on the S&P 500. Next one down here is QDT. This one pays around 23 cents a share every single week. And you can see I have 2,500 shares of this one. Next one down is Maggie, and this is the Magnificent 7, also from Roundhill. And this one pays around 35% per year. And as you can see, the share price is a little bit higher. And the fourth position here, my largest position, is in YBTC, and this is a play on Bitcoin, again, also from Roundhill. The top 4 funds are all from Roundhill, and these make up the largest positions in my portfolio. I refer to them as the Dividend Avengers. Okay, moving down the list, I have some other positions, and I don't want to make this video long and go into each single one of them. You can check out some of my other content when I talk about some of these positions, how I enter, exit them, all kind of good stuff there. But what are these positions able me to do? And I'll just show you my dividend tracker. This is a simple spreadsheet, which I also have a free video how you can build your own spreadsheet and how you can track your own dollars as you're getting them on a weekly basis. Up top across, you see all of my positions here, and I'm tracking them by every single week. So at the end of this week, I will post what I've made in these positions for this week. Let me just show you what I made last week, folks. Last week, I almost cleared $3,000 for the week. Now, as you can see here, this is what I'm getting from XDT, $533 a week. QDT, $598 a week. Ulti is a smaller position. I used to have a large position Ulti. I did not like the NAV erosion. I sold out of that position. I've built it back up slightly, but I'm still playing it by ear. BTCI is from Neos. This is on Bitcoin. This one pays monthly. Moving down the list here, YBTC, again, one of my Dividend Avengers. I'm getting $460 a week from this one. Maggie, $465 a week on this one. SpyEye, this is a monthly payer. I'm getting $310 a month. QQQI, I'm getting $440 a month on this one. Some of the other positions I have not received dividends on, which I should by end of this week. And this is from Nest Yields, Eggs, Eggy, and EggQ. I'm going to do a separate video on this in the future once I get some of my dividends from this fund. Okay, so you can see I made $3,000 last week, and I've been tracking this every single week. You can see that I've made over $50,000. Now, over the course of the year, I've invested more and more money. So after I do 12 months with the amount of money I have today, we're going to really do the test. Can we keep up our NAV? And that's really the largest concern with all of this, because if we see our NAV decrease, now as you can see here on this chart in Robinhood, you can see all of the red, which is open P&L. This is the total loss or gains that I have on these funds. Now you can see a lot of these are in the red because the markets have been very choppy. But one of the reasons that I've really built this Dividend Avengers portfolio, having the largest position in these funds, is to allow me to keep my NAV up. I don't want to see my NAV decrease, which you see a lot of that with yield max funds. Now, there's a way to play yield max funds, which would be to hold them for maybe a few months and get a momentum on an underlier that is moving in the upward direction. But long term, a lot of those funds see NAV erosion. This is why you see most of my positions right now are in Roundhill and Neos funds. Neos funds pay monthly, and they actually hold up their NAV very, very nicely. They don't pay as much, but they're a great anchor. So that is my positions. As you can see, we're going to watch these fluctuations and see how they do over time. Really, the goal is whatever we invest, we want to end the year with the same amount or slightly more would be ideal. And we want to be able to receive those dividends. I'm going to jump into my estimated income. So what I did in this spreadsheet here is I looked at every single ticker that I have, and based on the latest dividends that it was paying, I'm able to project what I can make on my dividends. So as you can see here, I have all of my positions listed here. Either they pay weekly, monthly, what the share price is, what they pay per share, and number of shares that I'm holding. Now with this calculation, right now I'm on track to make $175,000 per year. Now I do hold margin, and margin is basically I'm using Robinhood's money to buy a lot of these shares. So that is the next thing that we're going to cover. But what this margin is costing me is $8,600 a year. So if we subtract 175 minus the 8,600, you can see that my projected income is around $167,000 a year, which would be an ROI of around 65%, which sounds insane. And again, and that's why we use leverage. If you were to use just your own money, you would not be able to achieve this 65%. Now, watcher, be advised, margin does come with risk. Just like when you borrow any money from any bank or from anybody, there's always risk of not being able to pay it back. So I want to make sure that everybody's clear on that. But in a stable or a bull market, I feel like you can use margin responsibly. Margin is a tool. It's just like a hammer. You can hurt somebody with a hammer, or you can build a house. And that's the way I look at it. So next, let's talk about my margin. Okay, so if I click here in Robinhood, you can see that my margin available is $430,000. I'm currently using $200,000 on margin, which is slightly high. I've been kind of buying some of the dip that we've been seeing and really capitalizing on that. Now, as you can see, your margin status is showing I'm at low risk. If I click on this button here, this really breaks down how much I'm using. So you can see my margin maintenance requirement is $114,000. Now you can see some of my other videos where I talk about margin maintenance. My last video, I went into this as well. It did not get as many views for some reason, but I did cover this, the importance of margin maintenance. I don't sell any e-guides, folks. All this information is for free. None of it's financial advice. I'm just learning and I'm sharing it with everybody else. This is my buffer. This is how much I have above the maintenance requirement. So as you can see, I'm protected by double the amount. And this is, again, the amount of money that I've put into this portfolio. Now, scrolling down here, this is what's important with Robinhood. The annual rate I have is 5.25% on this money, which is dirt cheap. And the first $1,000 they give you interest free. Now, I'm going to leave a link in the description below. If you use my referral link for Robinhood, each one of us gets a free stock when you come over to Robinhood. So make sure you use that, and in a way it helps support this channel. Okay, so that is the margin status that I have on this account. So how do we put all this together and how does it work? Well, if we go back to my video, and I'm just going to use this as a diagram. Now, in this video, I cover very in depth how to use this. You can also check out this video. You might be able to learn some things I haven't covered in this one. But basically, the way you want to do it is you want to set up a system where all of your money from your income goes into your brokerage account. Now, with the money coming into your brokerage account, you're able to buy shares of the dividends, the dividend shares. So things like I showed you, like I'm buying XDT, QDT, MAGI, YBTC. Those type of shares will be bought with my income coming in. Now, because I'm buying those shares and I'm adding money to my account, I'm able to use margin to buy more shares because my available margin is going up. So for every dollar I'm putting in, I'm able to borrow another dollar from Robinhood, which is really amazing. Now, how do I pay my bills? Well, you pay your bills by using margin. So as you can see, my income does not go directly into paying debt, bills, and my expenses. It first goes into the brokerage account, which buys me the dividend paying assets. So this way you're able to compound all of your dividends, and you're able to compound your money. You're not wasting your money on paying down debt, paying your bills, or paying your expenses. So how do we pay our debt, our bills, and expenses? Well, we utilize margin. If I go into my Robinhood account, I'm able to withdraw money out of my account. Right now, if I go in there, I can withdraw over $120,000 in cash. That means I can pay my debt, I can pay my bills, I can pay my expenses. I can go to Walmart, swipe a card, and all of that will come out of my margin account. Now, why would I do that? Well, I do that because my margin is very, very low. It's 5.25%. If I can make 15, 20, 30% on the dividends that I'm investing in, why would I want to waste that money to pay my debt, my bills, and my expenses when I can instead buy more of these dividends? So you're buying into like a business. Your dividend portfolio is like a business that's working for you. So if you know any business owners, or if you own a business, you know that you taking your money and reinvesting into your business so it makes you more money makes more sense for you than you doing something else with that money. And that's really the same concept. We're using all the available money and we're investing into this dividend compounding portfolio. And we're utilizing the margin to pay our debt, our bills, and expenses. So how does the margin get paid off? Well, every time you receive a dividend, it automatically goes against the margin. So think of it this way. Let's say I'm making $3,000 a week right now, which every single Friday I would get a paycheck in Robinhood. These dividends would pay me. So that means that if I go out and I spend some money at Walmart, or I pay my electric bill, or I pay down my credit card, those dividends will then pay down the margin that I've just used. So in a way, you're not really carrying the interest rate more than a few days because it gets paid down by the dividends. So that is really the system. And I think once this clicked for me, it made a lot of sense why other people do this as well. You're able to compound and put your money to use. You're not wasting your money. And in a way, this is paying yourself first. Now, obviously, there's a lot of risks involved with this. One, it's you're at the mercy of the market, right? So if the market crashes, you might be hurting. And this is one of the reasons that you don't want to over leverage. You want to have your margin position in reasonable risk levels. The other thing is obviously with the downturn in the market, you might see a reduction in the amount of dividends you're getting. So those are things that you want to consider. Me personally, I am hedged because I have other investments outside of this portfolio. So for those people who are calling me out crazy, just relax a little bit. I do invest in real estate. I have rental properties that also pay me on monthly basis that I'm able to cover my bills with as well. So this is a way for me to supplement that income and really capitalize on the low margin that I'm getting. So I hope this made sense. This is really what I wanted to explain this video. If you guys have questions, please leave them in the comments below. And if you like this type of content, make sure you give me a thumbs up, subscribe to this channel, and everybody have a great evening. Take care.